and I've just been talking to Fana about the dollar yen. So I don't know if anybody's still here or not, or you've all disappeared as the connection went. So if you are, I'm happy to keep going. If not, actually the link's looking quite ropey, isn't it? Let me see if I can share my screen again. Have you all just disappeared? If you haven't, I don't know if my friend Fana's still here. Oops. There we go. Hide. Okay, some technical problems today. Hopefully you're all still here. I don't know. We're here! Very good, my friend. Right, so presumably you missed what I was talking about when I was talking about your request for the 15-minute dollar yen chart. So I guess you missed it. The first short was here this morning, this afternoon here at 1 o'clock. It went short, and then it closed here back above the 9 period. So trading this on a shorter time period, we wait for the cross, the 5 and the 9 to cross and the 20, and then go short, and then stay in it until it closes back over the 9. So that would have closed out flat, but you then gone short here on the 15-minute here at 2:30. Moving averages moving down nicely. We've got the 20, the 9, the 5 all nicely aligned. MACD was weakening quite significantly. Now MACD's gone under the zero lines. We've gone down here. But this area here is a big support area. This is the 200 period moving average. And this is the 38.2 from the higher time frame daily Fibonacci. So that's a key level. And that is also here. This is the daily pivot point as well. So big wall of support here for you 15-minute traders. So many probably have got out here as the news broke, but it's weaker news than expected. So this might continue to track down, but trend followers, that's still short there on a 15-minute. So let me go back. Those of you that are still here, because Fana asked me ages ago and I didn't realize the thing had gone down. So Ojilari, thank you very much. Video's not working, says Gary. Without your explanation, it's frozen. Right, okay, I didn't see that. Things were frozen. We've done the NASDAQ. Video's not working. We've done sterling. Dollar index, Mohammed. I don't know, Mohammed, if you're still here, sir. Dollar index rolled over yesterday. 1 hour time frame. It's weakened quite significantly this week. This is the 1 hour time frame, Mohammed, on the dollar index. Under 100 here on Monday, Tuesday, Wednesday, and Thursday here, significantly under 100. And more importantly, yesterday we moved down here, or not more important, just as importantly, we tested the 99 area as well. Tuesday, we tested 920. Wednesday, we tested and broke through 99.20 and went to 99. We rallied into the close. We rallied into the early part of the Asian session, but we couldn't break 99.50 and the R1 level. Actually, not to put on this R1 level, in fact, below now. In fact, our high was only 99.45, and then we've moved down, significantly in the last 3 hours and breaching and testing 99 again. So dollar index on the intraday time frame remains a week. If we go up to the daily time frame, you can see it's had a weak week. If I zoom that up, a week. So Monday, Tuesday, Wednesday, Thursday, 4 days down now, and we're out at the bottom. This area, this 1-2 support here at 99 below is being tested yet again. So dollar index rolling down today. Pound in 30 minutes and 1 hour. I'm assuming you mean cable pound against the dollar in the 1 hour. Let's have a look. 1 hour we talked about earlier. Big move up off 22. The 30-minute chart will probably look even more strong. So here you can see that 122. So again, the post data this morning on the 30-minute time frame that's gone long, and you're still long, although it's tested close now, but it didn't. That still remains long here on the 30-minute. But the pivot remains a tad too far at the moment, 122.45, and we haven't actually closed the 30-minute candles, although the wicks have moved up there. We haven't been above 122.30 on the 40-minute time frame. So remains bid, but looks like it may be running out of steam there on that 30-minute time frame. See how the lots of big tall wicks to the top, tall wicks to the bottom, so little movement, but it's still holding up to the upside. Mohammed. Ghazi, hello, my friend. Hope you're well. Not heard from you for a while. Aussie dollar. Let's start with the 1 hour time frame. Yesterday we got to 66.66. Relatively strong. The continued recovery in the Australian dollar continues. Today we dipped, but we didn't dip below 65.50 or 65.55 is a key area we've been pivoting through on previous weeks. So we're up on the upside. We remain holding that area there, and now we're going long, or looks like it's going long in this particular hour if you're trading that on the 1 hour time frame. So it's a rounding bottom, which is potentially well, we'll see where we go if we break 66, but 66 is a big resistance. Are we going to run to it again and move back down, or are we going to run to it and break through? What's the higher time frames telling us? Well, the 4 hour traders tested 66 for the first time here yesterday, and we retraced, but again, retraced to 66.50. So are we having another go at it? 4 hours remains well above its 20 period moving average from the 18th at 4 o'clock here. Big breakthrough, 65 on the following candle at 8 o'clock that night, and it's rallied since there. So it's a nice old move up. Ran to 66, some profit taking going on as we dipped down for 2 candles. Now we're having another go up potentially. So Aussie still remains relatively well bid, even though we moved down quite significantly this morning. Euro at POS, we just did Euro a minute ago, so I'm not going to repeat that if you don't mind. And that's fast saying they were back. Okay, so this is after we dropped out. Martin, you've just heard me talk. Well, this is the Euro. This is the 4 hour. I don't know what time frame you're interested in, but the 4 hour remains relatively well bid. So does the 1 hour. Even though we moved down this morning, we couldn't move under. Look at that. We couldn't. That 65.50 area held all of the Asian session, most of all of the European session, and then we're moving back up now on the US data that's just come out. That's been a bit weaker than expected. The unemployment data and the Philly Fed as well. So that's moving up on the 1 hour. If we go up to the other high time frame, the daily time frame, the issue with the daily time frame remains, excuse us, because it's obviously the 1 hour time frame with lots of lines on it still. But the key one you want to look at there is that the 200-day moving average sits there at 66.25. So 66.25 is the key 200-day moving average resistance for the Aussie dollar. But as you can see, the highs are still getting higher here. That's not a great chart, is it? Because it's too messy. But as you can see, as we've moved up here, we broke the 20-day moving average back here on the 6th of April, and the highs have continued to get higher. So that high there is higher than that high, is higher than that high. The lows are higher, that low is higher than that low is higher than that low, and that swing low is sort of in line there. So we've got a key support now, flattened out at 64, but we've moved up. We've moved over 65, so 66 becomes our key resistance. So Aussie dollar remains relatively well against the American dollar here, moving up, and certainly it's been quite positive for a while, the Australian dollar. Okay. Yes, okay. That's very good. I like you having conversations here. This is very good. I've never seen this before. It's good fun. Gold, says Flores. Gold remains bid. We talked about it earlier, but if you weren't here or we lost us in the track, let's have a look at gold. Gold remains relatively well bid. Flores, time frame, my friend. But let's, if you don't say the time, we'll start with 1 hour, go to 4 hour, we'll do the 3, the 4, the 1, and the daily. Okay, let's just make sure where you are. Apparently, I've created a new. I did, didn't I? Yeah, I've created a new broadcast instead of resuming the old one. But sorry about that, chaps. But the same people are still here, so that's okay, isn't it? Anyway, technology. Where were we? Gold. Let's start with the daily and come back down. So the daily rallied high and yesterday and the day before, Tuesday, Wednesday, rallied here to this 1763 high, and zoom in a bit. There we go. 1765, and then we've moved down. So, but we broke out. The key breakout, as I said earlier in the week, was Thursday, Friday, and Monday, and then we sold off quite aggressively on Monday. So we go back. This is the daily. So we go back down to the 1 hour time frame, and we zoom in. We see the big rally here as we went up. So this is the big break here from last Thursday, a week ago now. Big break over the 1725 area, which is a key resistance. We finished the week strongly. So Thursday was up, Friday big hour up, and then Monday we started the week very aggressively, running out of steam at 1763. Big sell-off, just as big a sell-off as perhaps the rally, but we interestingly and more importantly, we didn't break below 1725. So the 1725 resistance was broken going up. It was held on the move down, the initial move down, I should say. So we then moved up again, but we couldn't break the 61.8 Fibonacci level of the sell-off on Monday here. So we held 1750. So that becomes the new resistance going forward from here now. And today we've been very weak. We sold and gone short on the intraday time frame on gold, and that's again, it's tracked down. That's looking like that may be closing out from this short earlier this morning. However, the support is now the 200-hour and the S3 level at 1730. So we're now $5 above the 1725 level. So relatively, we're still relatively well bid, but so short on the 1 hour today. Daily remains relatively long, and the 4 hour remains relatively long, short, has gone short as well, having rolled over similarly to the 1 hour time frame. So, but that support level's held there for the 4 hour. That 1725 is key support area, but we're still down here on the 4 hour time frame. So, depending on your time frame, which way you're going with gold, but gold remains relatively well bid on the higher time frames. Silver in the 1 hour. I haven't looked at silver for a long time. I think I've got a silver chart here actually, without going back to the other one. Here we go. Silver on the 1 hour. Silver, even more so than gold, has recovered really aggressively. We've got the daily time frame. You see what an aggressive recovery we've had from these lows under $15 back in the beginning of the month here. So big recovery from 1575. Very strong month. Actually, let's put the period settings on here, and you can see what a strong month silver has had. So here, beginning of the month, we were down here 1775. We went as low as where do we go there? 1760 or 1460, I should say. And it's a very strong recovery. So we're here over 715 here, over the key 200-day moving average here at 1625 on the 15th, and we followed through quite aggressively. So we're back really into this level here. So next level to take us back to the January-February range here takes us is now within Grasco's, within the R2, R3 zone, so 1780 level. So silver remains well bid on the daily time frame. So scrolling down, running out of steam a bit on the 4 hour, as you can see at this 1750, and your time frame, okay, on the 1 hour again, that one triggered short. It's rolled up, but still really well bid, but on sideways. Tuesday, still moving up. Wednesday, running to resistance at 1750. And then significant short was triggered there this morning and followed through the next hour, and that's moved down into S2, so quite a significant move down. So again, we got support on the 1 hour time frame here at 17, so that's definitely a big round support for silver at 17, 1710 in fact that is. Intraday, we're actually a bit higher than that, aren't we? So intraday, the time they won, so 1715 has been your support on the 1 hour time frame today, and it's now sliding sideways. Needs to break over 1732 if it's going to go further north, under 1715 if it's going to go to the south. Ferdinand, how? I've started a new. Oh, that's on. Why isn't that showing? Doesn't want to show that, does it? Oh, I got that dropped out again. Am I still connected? Didn't go before it went off, but it's just a bit delayed because I was going to Facebook. Okay. Olabasi, Aussie, we did Aussie a minute ago. Were you still here, Olabasi? I hope you were. I'm not, 7 minutes ago, yes. I've done all. Aussie is big. I hope you don't mind not going. The audio is choppy, says Seth. Thank you for that. At least somebody's getting some feedback. Audio is choppy. Yeah, it looks like we're not. We've got a bit of a potential internet issue, particularly. I don't know what that means, believe you. I was saying, really, we are here. So 4 o'clock, you were still here, somebody said. So, yeah, the audio, and Seth, has he given up? Seth, are you still here? Yeah, looks like we may have lost ourselves, perhaps again. No more comments coming in. No more requests coming in. Maybe too much going on my PC. Anyway, this is the gold chart, silver chart, which again I'm sure a lot of you don't trade, in fact. So anyway, let's just run through the main currencies if I'm still working or not. It looks like it may have gone, doesn't it? No more questions coming in, which is a bit suspicious, isn't it? So yeah. Anyway, euro couldn't hold 110. Dollar yen has moved down. It's the 15-minute chart. Let's take it a wee bit. Couldn't get back to this 108 from earlier in the week, but continuing to move down. This is a 15-minute chart that somebody was asking about before when we've gone short here. Since turned around quite aggressively, as you might expect, because it was that, as I said, it was the key area, and indeed it did. So now looking to move back up, perhaps on the 15-minute, but still relatively weak. 107.65 is a key support. Sorry, relatively strong. Although MACD's gone negative here on that 15-minute time. Let's go back to 1 hour. Still relatively okay. Pivoting around. Right. All right. Somebody else is connected now. So let's have a look. Pound yen. Somebody's just joined us for some reason. Selling or buying, says Mohammed. Question doesn't come up. Why doesn't the question come up? Pound, Mohammed, it's moved up significantly this morning on the better than expected PMIs out of the UK here on this 1 hour time frame. But relatively, again, the time frame, Mohammed, I'm not sure what you're looking at. But if we go to the daily time frame, you see it's been sort of drifting down. This is May. This dotted line here is May. So cable has been drifting down all of May. We went all the way down here to 120.75 earlier in the week, and we bounced up from here. So if we come down the time frames, you see. Oh, let me zoom in a bit. So the beginning of May, down, May, down, May, down. We got this floor here on the 18th, under 121, and then we've moved up from there since there. But we can't break that 122.50 zone here, which is a key Fibonacci level, and then we've moved back down. So 122 today is a key support area, but generally we're sort of drifting down. It's a bit of a sort of no man's land, if you want. My voice is shaking, says my friend. It's breaking up. Is this ticking everybody off? This is not good quality. Should I stop, chaps? I'll vote to keep going. I'll vote to stop. Come on, tell me what to do. Because I'm happy to stay, but if it's irritating you because of the silly old man's voice, I'll stop. Anyway, let me finish this for Mohammed. We have a sort of higher time frames moving down. So with daily still moving down, retrace, but looks like it's moving down. 4 hour, the lows are getting lower. The lows here are getting lower. The highs are getting lower. Then we bounced, bit of a retrace, but we didn't break 2250. So 122.50 is where all the resistance sits at the moment, and we're moving down. So 122 is holding at the moment. 1 hour traders moving up, then we move down under 122. Thanks very much. Big move up this morning potentially, but capped at the 200 hour moving average there at that 122.35 now, so that's under there. The pivot point sits at 122.50, so that's our key resistance today. And now in the current hour, we've now turned lower again. So 122 needs to hold if this is going to hold up. But overall, the higher time frames remain sort of bearish on sterling against the dollar for cable as well. So I think everybody's given up with me. No more comments after my friend Carmen and shakes. Your voice is shaking. You do make me smile, my friend. We should meet again someday soon. Hopefully sooner rather than later. So if that's no more requests, I will call it a day, because we've had some technical issues. I think I've started a new stream and the other stream, but tomorrow, so let's just recap where we were. The main economic data. Can you see? Oh, you can see it, can't you? So the main economic data today, the key event was this one here, the unemployment, or the initial jobless claims, as the Americans call it, expected to come in at 2.4 million. It came in better or worse than expected again, which is it is a bit of a surprise. It's 9th week now. So 2.438 million people applied for new unemployment benefit in the United States in the week ending the 15th of May. The Philly Fed was bad, but worse than expected, but better than last time, 56.6. So Philly Fed, again, one of those certain manufacturing services that used to be very, very significant. The key data, again, today is really the PMI data out of the US, existing home sales as well. And then we got the double act of the Fed Vice Chair, Clarida, with a speech, and then some hours later, an hour and a half later, we got the Fed chairman, Mr. Powell, again with another speech. This is the fourth public utterances from Chair Powell in a really in the space of a week. So it's quite a key announcement again, but it basically has been very, very pragmatic about the state of the US economy, very much talking it up that it's a one-off hit, this pandemic issue. It's not a fundamental economic issue, although it could become into a fundamental economic issue if the lockdown goes on for any extended length of time. But the issue or the risk to markets is obviously clearly a spike in second wave infections, and obviously another spike in deaths. Remember, the Americans had over 85,000 deaths last time I looked, so significant issue of heading towards the 100,000, that psychological 100,000 level, and beyond into the summer is what many are predicting. So we've got some more requests coming in, so I'll come to that as well for you as well. So I was going to call it a shot, but somebody's asked for something else. So Jamzu, the US 30 and NASDAQ, we'll have a look at those, certainly. I say relatively big days, so still some key data to come today. So, USA 30, which is, have I got it here? I don't think I have it right. Let's go to it. Oh, yes, there is USA 30. Here, relatively well bid. This is the daily time frame, big move up. And again, another one of those, this is the daily time frame. So the highs up here in February, and our low down here, the 23rd of March was the spike, wasn't it? I've done this many times, but so here now, relatively positive. We're back over the key 50 Fibonacci level. So for the Dow to really rocket, or not rocket, but continue to move forward and move out of this resistance, this consolidation sort of zone that we're in at the moment, we need to break the key resistances that here, this 61.8 Fibonacci, which sits at 25,225 sort of level. So 25,200 and some key resistance areas before that. Before that, we got the top of the Bollinger Band there at 25,000 itself. So 25,000, first line mark in the sand. And then there's that Fibonacci level of the shakeout from February. And then there's the 200-day moving average, which sits at 25,600. So they're the key resistances going up. Supporting this move up is the 20-day moving average and the daily S2 there at 23,900. And the key 50-day moving average, which sits down there at 22,825 as well. So they're the key ranges. Intraday stuff, between that, as you can see, we've been really ranging for most of, certainly all of May. We can't get over there. We don't want to go under there. So the key, remember the USA 30 is the 30 industrialized, the big 30 industrialized corporations in America. When we compare this to the Nasdaq, which you asked about as well, it's a very different story. So let me zoom that in. So here we've got this big move down and a sort of a weaker, although it's moving up clearly. You know, you can stick a little trend line from that low there. We sort of, you know, continuing to move up here. You see the angle there? What's that? 30 odd degrees, 40 degrees, move up. If we compare that to the Nasdaq, it's a very much of a V-shaped recovery in the Nasdaq. But as I say, the positives over the 20 period moving average now, daily, over the 50 period significantly. So needs to break those areas we just talked about. Lower time frames continue to be okay. So this is our daily trend line. Not very arbitrarily put on. We didn't put on any accuracy particularly, but you can see generally that's our upside. So you can see the general trend is to the upside here. I'm going to dip down again here at the end on the 14th, move it up again. So again, 4-hour first resistance is this level here from this takes us back to April, which is our R1 level now. So again, we're recovering that 24,800 level we mentioned earlier. So that's our next line in the sand for 4-hour trades to the upside, and support is the S1 level today, and the 50 period on the 4-hour. On the 1-hour time frame, I don't know what we've been doing today. Just relatively sideways, haven't we? Not a great deal going on. It's sort of waiting for cash open potentially here, but the futures really just pivoting through yesterday through this area here, and again today. So not a great deal going on there. That looks like that may be trying to move up from this rounding bottom, which is relatively negative. But again, the 1-hour time frame a bit tighter. But again, the resistance sits there at 24,620. I'll send you 24,610. So I'll call it 600 for sake of round numbers. That's our next target. That would be a target if you were long here from this break up here this morning at the moment. If we have a look at the S&P, the Nasdaq, which I don't think I've got here, right? I've got the Nasdaq that I did. Actually, let's just open it. Let's open a new. Also got it here. USA 100. Put the same template on the one we've been using earlier. The crossing EMA one, for sake of. And if we do the same thing with the Nasdaq, you see the recovery is much steeper. Okay, you know, same as all moved down. But if we do the same Fibonacci retracement story, we can see that we're already over the 61.8 and already over the 50. So a much steeper recovery there on the Nasdaq compared to the USA 30, a much broader base, obviously 100 technologies, but the technology stocks are very strong. And as I said earlier, I don't know if you were here earlier, but some of the key stocks are back to their all-time highs. Shamsu. So Facebook is 2.5% over its all-time high. Amazon is 0.5% over its all-time high, and the other key players, Microsoft, Apple, Netflix, all within 2.5% of their all-time highs as the recovery continues. So the trend is very much to the upside. Nasdaq very much trending north of this key 20-day moving average. See where we broke over that. So that big move up for Nasdaq as it broke over we broke over the key 8,000 level here on the 6th of April, and it hasn't looked back since, really. 20 Friday support, and off we go. It's just been trending, so that is very much trending to the upside. And I'm guessing there's been no more comments since yours, Shamsu, and it's gone very quiet, so I'm assuming we might have lost the link again. Anyway, if that is the case, thank you for being here today, and we shall